Good afternoon. This is Brian Kuzma from Commercial Rare Coins in Lauderdale by the Sea. I'd like to say it was sunny today, but we do have lots of rainstorms and thunderstorms. Kind of nice because if it was sunny every day, I guess we wouldn't appreciate it as much. Anyways, let's get to our daily report today. Kind of about the same as where we left it on Friday. Not much of a change. I thought it was going to be possibly up a little bit, about the same, and even down, and that's really not a prediction at all because I just said everything. So, but anyways, it kind of was down a little bit this morning, which wasn't unexpected. I saw it around 1700, getting close to 1700 level, but it never quite went below there, and there you go right there, 1705, 89, and a high of 1735. Stayed around that Friday close, what it closed at on Friday, which was kind of surprising. Because after I saw futures markets on Sunday last night were down dramatically, I kind of expected a big down day for the Dow because of that. But what we saw was kind of not too much of a big down day for the Dow. And I don't know the reasons for that. You know, it's perhaps it's because the Fed kind of threw some more money in there somehow. I'm not quite sure to prevent that from happening. But seems like the Dow kind of held up and gold held its level as well. Silver, basically the same thing. It did shoot below that 17 level, but not for long. You can see it hit 1698 as a low, 1757 is the high, and 1741 is where it's at right now. As you can see, the market's open, and these are the world markets, or what we used to call in the old days, before we had access to the internet, is aftermarket spot prices that we used to access by telephone, believe it or not. Now we can access aftermarket prices, or what they call world spot prices, online pretty fast in 24 hours, 24 hours a day. Here's the New York prices. They closed at 1720, 1739, so not too far out from where we're at right now. Let's take a look and see what's happened here. Oh, I wanted to bring this up. You know, some people were talking about money supply, comparing the money supply versus the price of gold. More or less, it's unfair to take a small segment of time and say, well, because of the correlations here, you can make that correlation all the time. That's not necessarily true. However, I do think there is a really good connection with the money supply versus the price of gold. You can kind of see it here in 1980 a little bit, and you can kind of see it here 2008, where increased the money supply because of the 2008 financial crisis. Well, we were having a crisis back in '79 as well. If any, people will enough to remember, interest rates were getting close to 20% or something like that. CDs were paying 10, 12, 15%. I'm just guessing off the top of my head. They were far above 10% though for a CD. That was that time. And then that is also about the same time gold was making its high around $900 an ounce. I don't know where they get these graphs that show $800 gold as a high. I've been seeing this online. I'm not quite sure what they're doing here, but gold actually was close to 900, and here they're showing 650. So a lot of these graphs I see are completely off as well. However, it kind of does give the point here where you can kind of see the correlation. And I looked at some other graphs. Don't have the graph up here to kind of see that same correlation. You see that. But again, 2008, we went into huge money printing. I'm sure we did the same thing in 1980. And again in 2020 with the current crisis, I think we're seeing the same thing. So just my opinion, that there is a connection between the money supply and the price of gold. The more money they print, this is going to, what I'm going to say, it's like gold inflation. You know how they talk about an inflation of goods like food and gasoline inflation? Well, this is gold inflation. Gold is a measure of the dollar and measure of other currencies. So this is just inflation of gold, which really means that, back here in 1980, or even prior to that, you could buy 200 US dollar bills for an ounce of gold. Now, you can buy, 1,700 $1 bills for an ounce of gold. That's gold inflation, folks, if you can wrap your head around that. Just take a look at the Wall Street Journal here. 157 again with futures markets really getting hammered yesterday. I was really surprised to see that they didn't really get hammered too badly today. Everything's kind of status quo for whatever reason. Same stuff going on in the world, nothing different here from what Wall Street Journal says. Again, this is Brian Kuzma from Commercial Rare Coins and Precious Metals in Lauderdale by the Sea. My phone number is 954-493-8811. We're here 10 to 4 Mondays through Fridays. Call us anytime. We're happy to answer your questions about precious metals, and we do buy and sell all types of precious metals and rare coins and currency and other things. And if you can hear that, you can hear some lightning in the background. So anyways, thanks for watching. I'll be back tomorrow. I do these reports every day. I'm not sure what time I get them out, but I do them every day, Mondays through Fridays. And again, thanks for watching. Talk to you tomorrow. Have a nice day.